Donald Trump's election as the President of the United States of America has been accompanied by intense volatility in the financial markets. Stocks fell sharply when the votes were being counted, but once the result was declared, there has been a spectacular turnaround in some markets.
It's obvious that investors are looking at Trump's campaign speeches and the acceptance speech that he made on November 9th to understand where they should put their money. We'll not really dwell upon whether they are right or wrong to do so, or whether Trump will be meeting his campaign promises. But if we study the movement of the financial markets over the last 1 week, there are few signals that are emanating. The first is that dollar is going to reign supreme in the days to come. Trump obviously stands for US supremacy, so it's obvious that the US dollar has to be pretty strong in the coming days.
We must reclaim our country's destiny and dream big and bold and daring. We have to do that. We're going to dream of things for our country, and beautiful things and successful things once again.
The dollar index has been rallying very strongly in the last few weeks, and it closed at a multi-month high last week as well. The reasons why the dollar index has to be strong are twofold. Number one, if Trump starts a trade war against all the other countries, it's going to cause a rise in risk aversion. And this will obviously make money flow into dollar, which is seen as a safe haven.
We are going to fix our inner cities and rebuild our highways, bridges, tunnels, airports, schools, hospitals. We're going to rebuild our infrastructure, which will become, by the way, second to none. And we will put millions of our people to work as we rebuild it.
Trump's proposals to boost infrastructure, build roads and bridges and so on are going to increase US GDP. It's also going to bring about inflation in US. This will make US yields rise, which will again lead to a dollar strength. Emerging markets are not going to have it easy in the coming days. The emerging market equity markets have been falling over the last 1 week. The currencies have also been getting hit. There are again a couple of reasons why emerging markets are going to face the heat in the coming days. The first reason is Trump is obviously anti-immigration and anti-trade. So if he goes about implementing his anti-immigration laws, then this is going to hurt emerging markets which have large exports to the US. This will hurt their currencies as well as equity markets. Number two, if dollar strengthens, this is going to hurt the currencies of all these emerging markets, and that will again cause funds to flow out of these emerging market equity markets. US equities are going to be really strong in the coming months. The Dow Jones Industrial Average recorded the highest gain among all the equity indices in the past 1 week. It was up about 5%. Interestingly, if we see the Nasdaq's movement or the rise was a little bit muted, it just rose about 3%. That's because Trump stands for the old economy. Old economy stocks such as the construction, real estate, etc. really rallied last week, whereas the new economy stocks, is dot-com stocks or the e-commerce stocks, might not have rallied that much. Indian exports to US will be hurt if the import tariffs are hiked by Trump. So pharma and IT stocks are likely to get hurt in the coming days if Trump implements his policies. A strong dollar is going to impact the Indian rupee. The rupee can go down as dollar strengthens further. The fund flows into India are likely to be affected. That's because the global emerging market funds are likely to see redemption as foreign investors move out of global emerging markets. Since India is seen as being part of this basket, Indian equities will also suffer some fund flows once foreign investors start pulling money out of these funds. So what should investors do in the days ahead? Think long term and believe in the India story.